Welcome back to Stay in Your Lane podcast by Triple T Transport. Today, I'm your host, John Maley. Today, we've got a very special guest, Bob Costello from the ATA, chief economist, takes care of many different things, cross borders, intra, the list goes on and on. I'd go through your title again, Bob, but we don't have that kind of time. It's a 15-minute podcast. So, if you would share with our viewers any updates since our last talk. I would say it was late May, early June when we last talked. So
sounds about right.
We're a few months into that, and we've got a little time before we hit the fourth quarter. But we'd love to have your thoughts as what you see overall in the trucking industry.
Yeah, thanks, John. It's always a pleasure to be here. Things have gotten, since we last spoke, I would say things are softer, right? Overall, in the trucking economy. And I chalk that up to a few things. Of course, everybody talks about first and second quarter GDP were negative. I don't know if that's going to be an official recession or not. You still have a good, solid jobs market out there and so forth. So it might be hard for the folks that make that determination to actually call it a recession. But it really doesn't matter, I think, in our industry, right? I mean, things have softened up a bit. We certainly have softened up a lot in the spot market. Contract a little bit, but not nearly as much. And I really think that's sort of the trend going forward as well. I think that there's, this fall freight season's not going to be a gangbusters, certainly. But I also don't think it's going to be the worst we've ever seen either. And so that's where I kind of stand. If you look at overall, what are people doing? Well, the employment situation is really good. I said that earlier. It's really good. That means people are making more money. And if it wasn't for the fact that inflation was so stinking high, they'd be spending a lot more of it too, right? And on more things. And I think freight would be a lot better. So what's going to happen? The Fed's going to we got to get inflation under control. Of course, they spooked markets not too long ago by saying that at Jackson Hole at their meeting. And but that's what they've got to do. I mean, they've got to get inflation from 7.5% to 8% down to they're not going to get their target at 2%, but they've got to get it at least moving in the right direction, right? Before they can start to say, all right, let's take a little bit of pause. So what's that going to do? That means interest rates are going up, continue to go up. I think the short-term interest rates that they said will be close to 3.75, 4% by the end of the year. That's going to slow down freight a bit. But by the same token, last year was a record year. And even if it falls a little bit this year, it's still going to be the second best year on record, not in terms of growth rates, but just in the level, right?
Right.
This is still great. It's not. We all know that. It's slowed down. I mean, there's no doubt as we're spending more on services, less on goods, the freight economy has slowed. And it's not just trucking, and much of that's been in the spot market, not contract. But by the same token, we're not going into a 2008 recession either.
I would agree with you. I think that, people maybe are sitting on some money. They have money to spend, but they're holding up.
What's interesting? Yeah, John, what's really interesting about that, I think you're talking about households. And what we see when it comes to the household data is, I like to think about it as a third, and a third, right? Okay. You got low income, middle income, high income. High income folks, they'll change the way they spend a bit here and there. They tinker on the edges, but there's no big changes right out of that group. The bottom third actually is the same way. Right. They spend everything they make, and they have to. And if inflation's up, they still have to spend. So what do? Unfortunately, they go into debt more, and they do that sort of thing. But they're already having to spend everything they got coming in, and they continue to do that. Who changes is the group in the middle. They have pivoted. That group has pivoted, and they've now buying less expensive items because of inflation and all. And so a lot of these retailers were caught off guard, and they have too much over here and not enough over here. And that's when you hear them talk about the inventory cycle and problems and all. If you look at the total inventory cycle it's not the lowest it's ever been, but it's not the worst it's ever been by far, right? But there are products they have way too much of, and there are other products they can't get enough of.
So one of my clients I was talking to the other day, and they have, half a million square foot warehouses. So now they've got tons of COVID materials, and they're not selling. People stopped buying all of that. So now they're stuck with all this inventory level, but it's not what they need, and it's not what they're going to sell moving forward, unless they're waiting on they think another pandemic's going to hit us, right?
Yeah.
So how long does that take to wash out?
Well, I mean, it just depends on the products, right? I mean, some of these folks are cutting, and that's going to help the inflation environment too, by the way. If some of these folks have too much inventory of one thing and they're like, we just got to unload it, then what are they going to do? They're going to cut prices. They're going to take a loss that will help the inflation growth. So that'll be helpful there. But I think they'll unload a lot of this stuff pretty quickly. Now, in the case that you just brought up, I don't know how easy that is with COVID related, but if you ordered products that consumers were buying during the depths of the pandemic because they had money and they weren't traveling, and now they don't have as much money because of inflation, although incomes are rising and they're rising really nicely. But the thing is, for most occupations, it's not true for truck drivers though, but for most truck occupations, inflation's exceeding their more rapid rate of income growth. Incomes are up nicely, 5.5%, 6%. The problem is inflation's going up 7.5%, 8%, right? So they're losing. So they're changing the products so that they can get more of a cheaper brand. And that's also what I'm hearing from some of these retailers. They're like, I got the more expensive stuff on. I can't, I got to cut the price of that to get rid of it. It's this cheaper stuff. I need to somehow figure out how to get more of it.
Gotcha. So moving into 2023 and in the fourth quarter here of 22, where do you see us heading?
Yeah. One of the things I think it's interesting. I think it's going to be a really interesting, unique. I mean, this industry is unique in so many ways, but first of all, when it comes to trucking, and I think there's been folks talking about this stuff, and I maybe am not online with what some folks are saying. I really do not believe much capacity has been added net to this industry.
I would agree with that. I would agree with that 100%.
And in fact, I think we're going the opposite direction now, right? I think that they tend to be smaller, whatever you want to call them, independent contractors, fleets that are struggling, right? And I get it, right? Think about this. Everything that they're buying is going up in costs, right? I mean, whether that's equipment, that's fuel, that's tires, that's insurance, and it's drivers, right? It's all going up. And when, especially in that spot market, when those rates really came down, the tremendous pressure that those folks were under. And in fact, here's what's happening now, and we see it showing up in some weird data. For example, if you look at employment data, you will see that employment in long-haul truckload is going up, okay? And the natural thing for people to say is, they're getting a bunch of drivers and employment's going up and there's a bunch of capacity that's coming online. Not at all. It is first and foremost, it's a lot of those independent contractors that didn't make it, okay? And they're moving, and I talk to fleets every day, and I ask them, are you seeing independent contractors now becoming employee drivers? Absolutely. They see that over and over, but it shows up in the employment numbers as a gain of employment, because it is, but it is not a gain of capacity, right? It is a shifting of capacity. The second thing is, in normal good times like we had in the second half of 2020 and 2021, what do fleets always do? They go out and they buy a bunch of trucks. What could they not do this past cycle?
Couldn't buy equipment.
Couldn't buy it, right? So there's no artificial increase in capacity from there. So my point is things are slowing down. We know that it's much more in the spot market than it's contract, but even contract is slowing, a bit. Certainly leveling off. Let's call it at least leveling off. But I think it's going to be one of the shortest cycles we've ever seen in the trucking industry, right? Even if we go into a recession, a full-on economic recession, I think it's going to be one of the shortest cycles that we have ever seen because there wasn't this capacity addition. And there, in fact, if anything's happening, capacity is going out of the industry.
I would agree with that. We are seeing, was it 105,000 authorities were granted?
Right.
And 70-some percent, 78% or something like that was owner-operators or independents. Those guys just left company equipment.
That's right.
They left the company equipment. They went and got their authority. Living in the spot market, all of a sudden it dried up. They're not getting hung with that equipment they got a fortune in. They can't cover that.
Right.
And they're going back to being company drivers. We haven't added any drivers. If anything, we're still short. If anything, we lost some through the attrition of this process.
I will say, talking to schools, talking to fleets that hire, they are finding some drivers, okay, in certain areas of the country coming from other occupations that they're training. So I don't want to give anybody the impression that we're not training up new drivers. You have to just remember, though, because we are. It's one of the few occupations where their average weekly earnings is growing faster than inflation. But we have such a high average age of drivers. Retirements continues to happen. People getting pushed out of this industry and this occupation, I should say, for a host of reasons, accidents. They're doing, or failing a random drug test, and you name it, right? It's a host of things. So what I'm saying is that group getting either leaving on their own or getting pushed out of the industry is equal to or exceeding the new group coming in.
Agreed.
Right? I do think, by the way, macro, our best chance of a recession is early next year because it takes 6 to 9 months for Fed policy to fully kick in. So, whether or not the first 2 quarters of the year is officially a recession or not, again, I don't think it really matters to us. It is, it isn't, it is what it is, right? But I do think that there's likely to be a mild, I think the odds of a mild economic recession are growing. They're a shade over 50% now, and it's likely to happen in the first half of next year.
All right. Well, I think we're on the same page, but I love hearing your perspective. You do bring a value, an innate value to the viewers and to us. So thank you again for joining us. I look forward to talking to you there in the fourth quarter.
You make it easy. I appreciate it.
Well, it's supposed to be easy. I mean, the industry's tough enough. We're supposed to have fun with it. Thank you. Thanks for taking the time, and we'll see you soon.
Sounds good. Thank you.